Good evening. This is Noble here for another dose of market information. We got a lot to talk about real quick. We got a lot to talk about, but it's going to be real quick. Facebook. What just happened to Facebook? Whew. What just happened to Facebook? It's crazy. I love what I do, man. Like every time something happens in the market, I got enough people I'm connected to. Whereas if I'm just out doing my thing, I don't really know what's happening. I'm just like, I went to get some food today from my favorite spot. I start getting all these messages, students hitting me up. I'm like, what's going on? Earnings. Facebook's earnings. Good Lord. Stock is down like 25% right now from the close. From the close. What does that mean? Why did it miss earnings? What did they expect? What is the company saying? What's the, you know what? I ain't gonna lie. I'm gonna tell y'all the truth. Facebook never takes responsibility. There's a difference between blaming factors, like knowing why you missed earnings, and blaming, well, this didn't, and this thing, and all of that, and then we're losing. Like they blame, but they don't take responsibility. They really don't. If you really pay attention, and I'm probably talking about Mark Zuckerberg specifically. Hopefully, this won't somehow get my little show canceled because I'm on Facebook. So I'm gonna shut up. I'm gonna stop. Matter of fact, Mark, you're doing a good job, man. You weathering the storm as best as you can. You weather the storm as best as you can. Oh man. Okay, so we're gonna look at the chart as always. I gotta show you the chart. We're gonna look at Snapchat. We're gonna look at Twitter, Pinterest. We're gonna look at a couple earnings plays that just happened. So AMD did really well. Google killed it. Oh, Google killed it. I had some people who were in Google, and I was like, "Yo, when we open, you you better sell most of them contracts for sure. Maybe leave one, just saying. You probably don't even want to do that, right?" So this is exciting, man. Like if you're not a part of this world, like it's like the world behind the world. I can't imagine like 15 years ago when I was just living my normal life, but I didn't know this was even happening behind the scenes. Like it's crazy. It's like it's the best TV show ever. The drama is drama, and then it's like highs and the lows. Like just last week, everything was like 7 days bearish. It was like the craziest, and then now they was like, yo, the Nasdaq's been up 4 days in a row. We ain't been up 4 days in a row since 2020, and then we was just last week 7 days down, and right. So it's crazy. What do you do? How do you stay calm when they're shifting and pulling and tugging on your emotions? Another part of this pause. Another reason I'm doing this right now is because I just got a new mic. So I wanted to go live to just kind of play with it a little bit. I don't have my audio interface yet. I just got the new Rodecaster because I'm getting ready to drop. I mean, technically this is like a podcast, but official on shop, Spotify, iTunes, all of and I'm actually doing two, right? So this is my old mic. It's a Shure. This is the new boy. Ooh, ooh, I'm excited. I'm excited. And the sound isn't perfect because I don't have the audio interface and stuff yet, but we'll get to that. So as always, let me know who you are, where you are. I'm in Atlanta. Where you at? Where you watching me from? Before we dive into this and have some fun. I wanted to put my little cool, these are like for the blue, blue light. That blue light that comes from your computer and phones. We listening to we watching so many screens. This stuff ain't good for our eyes, but whatever. So I want to put these on, but I think y'all gonna get so much glare. Yeah, that's a lot of glare. I'm gonna suffer through it just for a minute. All right. So let's see. Sheena Lynn, who is half naked in this sexy lingerie in her thumbnail. Oh, I should have never said that. I'm sorry. It was the first thing I saw him do. I was just like, oh. All right, let me move on. What's up, Sheena? Very nice picture. What up, Justin? What's up, my guy? How you doing? Penne Pasta. You're gonna end up in Facebook jail. Yeah, I might. I'm gonna shut up. Sheena said ATL. Oh, you in ATL too? Okay, that's what's up. Penny from Indy. All day. Naptown. Bianca is in Houston. What's up, Bianca? Glad you're watching. Let's see, Justin in New Orleans, New Orleans. I can't even say. I usually can do some pretty good impersonations. I really can. Y'all be amazed if I start doing some impersonations. I'm gonna slowly roll out everything in this crazy brain of mine. I ain't gonna do no impersonations tonight. He said, "Who that?" Uh, Mobile. Ty's in Marietta. What's up, Ty? What's up, Ty? Justin said, "Hey, all right." So we got a few people on. A whole bunch of people don't, people be watching don't like the necessarily talk. It's cool. I just need a few people. Feel like I got some engagement, got a good audience. So let's do this. Let's start with the basics. Let's start with the basics, y'all. The basics. The basics real quick. Let me take this off. So. I'm gonna start with Facebook. Which is actually known as Meta. They changed their name back in October. Why? To get ready for their transition to really positioning themselves to own and take over the metaverse. Yes, it's the same thing you think of Marvel Universe, and they got like these multiple dimensions and all of this, like reality is infinite realities and all this stuff. It's kind of the same thing. It's going into a virtual reality, a virtual world, just like Ready Player One, right? Where me and some of the guys from Insider Trading. So real quick, matter of fact, hold on, let me pause for a second. Because when you really get in podcast like mode, you usually start off, "Hey, this is Noble with, your channel for this and this and this," and you kind of gave you a little, you gave all of that. I didn't do all that. I told you I'm getting ready. I'm studying. I'm learning like really what the best podcasts in the world do. So right now I'm just gonna go live. I do my thing. It's going to be a bit more professional-ish in a minute. I'm excited. I'm excited to push myself and to make these really concise and tight. I tend to ramble at times. I just be having fun. But I know y'all can't just be up all night. So let me say this real quick. I've been investing in trading for about 10 years. I quit a 6-figure job to do this. I got my MBA from Clark, Atlanta. I'm from Gary, Indiana. I went to Indiana University for undergrad, worked for several years, and then decided to go back to get my MBA. I was in the heart of the recession working at Bank of America, learned about this trading world. Something took hold. I started making some money. I quit my job. I was killing it at first, making like 500 to 1,000 every day trading futures. And then the European debt crisis happened. I didn't know how to handle volatility. Sucked out all my confidence. I was probably depressed for like a whole year or something. It's been a journey. Years later, I love what I do. I am doing exactly what I wanted to do, but not even to the level I'm going to do it at. So I do these just to help educate, to bring you some live interaction. You can ask me questions. As you see, literally, you can ask me any question as we go through this. So I want you to feel like this is home. I'm going to do this a lot more. I want to keep this live sort of show thing. And right now, I just kind of do it sporadically. So it will be a set time weekly. If not, sometimes, that are sporadic. So I'm glad you're here. Thanks for being here. I just wanted to say that real quick because I usually don't. I just jump into it. So back to Facebook. Meta, the name of the company. The shares at the end of the close today were 323. I'm going to show you this chart in a second. Earnings came out. The company was worth $898 billion at the close of today. Right now, by the time we open, they will literally have lost $200 billion of value. How do you get the market cap? All you basically do is take the number of outstanding shares, the number of shares that literally comprise the total ownership potential, 100% of ownership potential in this company. 323 multiplied by that equals 900 million. But the price literally in just a few hours has dropped because of earnings. Earnings is everything. If you're new to investing, you're new to trading. Earnings is what makes a company live or die. Are you earning? This is what shareholders care about. Are you making money? How much am I earning per share? Right? Are they meeting estimates for revenue and for earnings, or are they not? It's real simple questions. The companies that do continue to do that and do well, they become the Apples, these big mega cap, the Teslas, the Apples, the Microsofts, the stable companies we all know and love. If they don't, they start sliding from grace, or they never get up there where we can fall in love with them. Everything's about earnings. Everything at a company. Like when I was working at Bank of America, how many calls I was on, and they would say, something, shareholder interest. Shareholder interest is so serious. It's so serious. So I just want to say that really quick there. Now let's go over here for a second. So let's actually talk about what happened. So the earnings per share. There's kind of basically two things to earnings, right? Did we meet our earnings, like revenue, earnings per share goal, right? How much did we earn? And then what was our revenue? Revenue, right? So per share, $3.67. You can flip it and make it like, go up to like how many billions they actually earn. So let's just say 3.67 billion is what they earn. They were expected to earn 3.84, so that's less. So that's what the market did not like. Now revenue, they actually beat revenue a little bit, right? 33.67 billion. It was expected to be 33.4. So that 0.4 from 0.6, yeah, that matters. That's $200 million. It's just a little 0.2, but that's $200 million. The same way the expectation was two, almost, yeah, 2 point, right? So about 230 million less than they thought, right? You have some of the best financial minds in the world, tons of different firms analyzing, trying to predict and say, hey, this is what earnings should be. So when companies don't hit their earnings targets, oh, the market reacts. And earnings came out after the market closed. So I know you're like, well, how did the market drop? If you're new, how did the market drop when nobody's trading right now? No, like you can't. The market's not open. Yeah, it ain't open for me and you. But if an earthquake happened and destroyed, Tesla's main production building, or Amazon or anything, yeah, prices move throughout the night as well too, right? And even the orders that you place. I just had a student hit me up. He actually took the earnings play. He shorted. He bought puts. You can make money when things go down or go up, right? This is why I teach. This is why it's so important. I was literally just telling a few of my buddies. They're a little bit younger. They don't know too much, and I was telling them, I'm like, yo, do y'all know how deeply important it is while y'all 25, 26 to get into this investing game? You can make money when stocks go up or down. They was like, what? I said, yeah, that's why rich people stay rich. It doesn't matter what the economy does. And a good student of mine, he's new, just took my 7 weeks options class. He bought a put. A put is basically it's an options contract where you're making money if the stock goes down. He bought a put for 5. He just hit me up. He was like, bro, you think I should get out right at the open? Should I place my order to get out? I was like, well, how many contracts do you have? He was like, I only got one. The contract cost him $580. His strike price, the price he needs, he wants Facebook to go lower than, was I think 305. What was it? Let me look real quick. He just told me. Where is it? He just told me. Hold on, let me find it real quick. Let me find this real quick. Where is it at? Where is it at? Where is it at? Nope. Get rid of that face. Get rid of that face. Hold on. I want to tell y'all this. What was his strike? 305. It's 305. The stock and after hours, once the market reacted, the people, those folks who have the institutional buying power to actually affect, right, with orders being placed from people like me and you, that all calculates into the opening price. But you can see price even if you have the right brokerage, the right platform, which I'm about to show you. You can actually see the prices at night, even though you can't really do anything about it. Like you can't buy Facebook at 2 a.m. You can, but you'll get it for whatever the price is at the open, right? So the price, he had a 305 strike. For those of y'all that don't understand options, just trust me when I say he's gonna wake up a very, very happy guy. Very happy. 305. It was already at like 245 the last time I looked. That's what, a $65, $70 drop. Ooh. That's how you turn $600 into several thousand, hopefully, if not more, depending on volatility, which is a whole nother thing. Let's just say he's gonna wake up happy. That's all I can say. He's gonna wake up happy, right? Once again, you can make money in both directions, both. So what else? Facebook also missed their estimates with user numbers for the first time, I believe, in history. I didn't have a lot of time to double check 12 different sites. But anyway, the daily active user, the DAUs, right? So they have 1.93 billion daily active users. Analysts expected it to be 1.95 billion. That's 200 million different. That's a 200 million difference. It's big. I know it's just 1.93, 1.95, but that's millions of people, right? Millions of people. So they missed that. The monthly active users, 2.91 billion. They thought it would be 2.95. That's 400 million people less than the estimates, right? So they're not they're not really tracking like they like the market, like the analysts want them to. And average revenue per user, 1157. Analysts expected 1138, so it's a little bit higher. So that's cool, right? So think about this. If you're Facebook, when I started this off and I said Facebook had some it's blaming some things, right? So it literally says here, it blamed the lower expected growth partly on inflation and supply chain issues that are impacting advertisers' budgets. What does that mean? That means the companies who are waiting on chips to from the semiconductors. There's a big semiconductor shortage in the world. I think you should know that if you invest in the trading, right? Tons of different products use chips to process and to do all the literally processing that happens in phones, just different types of technology, right? So when you have a supply chain issue and there's not enough chips being made to get them out to all these companies, it slows down those advertising budgets. What are we advertising for? We don't even have enough. We're going to build up the demand with paying, crazy advertising dollars and then not have the product for it. Like, why would we do that? All right, so it makes sense. Okay, cool. Okay, but I still don't. Okay, I'll give Facebook that. Okay, I'll give them that. What else did they say? They talked about how their usage of more people are using reels. Now here's what I didn't kind of like from several articles I read. They're talking about their reels, right? You guys created the option for people to make reels, but then you're saying, oh well, reels is part of the reason we're not really getting the same level of monetization, because more of the features that Facebook has that tend to monetize higher are stories, right? Instagram stories, the Facebook stories, video ads being ran, certain business pages. There's tons of ways to make money on Facebook if you didn't know, as like a business. I'm really now getting kind of back into really digging into it a bit because I'm about to start running ads for my stuff, my business, yada yada yada. Right. So I didn't like that though. I'm like, y'all created reels. So don't be like, oh, the reason we didn't hit earnings is because you created it. That was your decision. Right. So, I don't know. Some of this stuff I read, I was just like, this doesn't sound like you're taking accountability to say, hey, we thought this would happen. This happened. We're going to fix it. Right. It seemed to be a lot of like, well, yeah, a little blamey. In business, in relationships, and anything, students in education. I just don't like people that instantly go to blame something or somebody else. Own it. Because that's the only way you can fix it. Right. So let's do this. Let me jump over here for a second. So Kevin O'Leary, y'all familiar with Kevin O'Leary from Shark Tank? He said Facebook will survive because there's nowhere else to go. And I said, dang, Facebook will survive because there's nowhere else to go. Somebody said, what's up, Noble? What's up? Whoever said that. He's kind of right when you think about it. They have such an amazing platform. The data, the analytics, they've been tracking and following almost 3 million people. They have a million, 3 billion people. They have literally almost like half of the world is on Facebook. Right. So in a very high level, simplistic sort of way, right? Simplistic sort of thinking. All right. What does that mean? When you can reach half the planet, technically, maybe not half, but good 35, 40%. That's a lot of data. That's a lot of information. All right. So there's a point to it. I love that he said that because it is a really simple analysis. It's just like, where you gonna go? You're gonna get off Facebook. Where you gonna go? Facebook owns Instagram. You're gonna get off Facebook to get on Instagram. Everybody's not on TikTok. You can't have the type of dialogue you can have on Facebook on TikTok. You can't have any. I mean, you can, but not really. Twitter, nope. YouTube, long form, yeah. I mean, Google's competing. But Google just killed their earnings, though. Google just killed their earnings, right? So another competitor, Snapchat. Oh, this was from the second. This was from the second. Today's the third, right? Oh, this not just today the second. Good lord. It's been a long week already, y'all. So Snapchat underperforms Wednesday when compared to competitors. See these ads over here, man, they be hunting me. Literally, they are stalking me. I love hats from this spot. I ain't gonna even say the name because they ain't paying me to advertise, but they're stalking me. All right, so Snapchat underperformed. We're gonna take a look at Snapchat. Twitter, what is Twitter doing? Twitter was a little higher by Wednesday in pre-market trading, right? So that's pre-market though. So we got a little bit of lay of the land, right? Facebook is experiencing some challenges as a business. They got to come to the table and figure it out. How do they stay competitive? How do they continue to get more users to engage? How do they get those active active user numbers up, the daily as well as the mass, right? And then how do they continue to really monetize per user and stop blaming the technology that they rolled out, saying, "Oh, well, Reels is the problem. We haven't monetized Reels well." Well, figure out how to monetize them well, right? And I'm thinking shareholder as a shareholder, you're like, figure it out, Facebook, right? Y'all work for me. I own shares, right? So this is like, you own shares of Facebook. You should have that type of mentality, right? What are we gonna do to fix it? What are we gonna do, right? As an owner, that's what owning shares means. It's ownership in these companies. And if you had enough shares, right, you would have some voting rights that would probably matter. I talked yesterday. I was breaking down Google's earnings, which we're going to look at really quick. If you had enough shares, there's different types of shares that give you different voting rights. The Google class, I think it's class A shares, you get one vote. The class B, I believe, I might be getting the A, B, and C mixed up. One of them gives you no rights. One of them gives you one vote. The other gives you 10 votes, and those are the private shares. Yeah, it's a lot to this guy, right? So let's do this. Let's take a look. Let's just dive in. Let's just go here. Let's just go here, y'all. We got to look at the stocks. We got to look at the charts. We do. We got to. It's going to be ugly, but we got to. So let's go here first. I'm going to do one by one. All right. So all you really need to know, matter of fact, wait, give me 1 second. Let me make these because I saw this the other day. I want to make all of my candles just green or red, a strong green or red. So you can see for those of you guys who are new. So this right here, this was earnings, right? This right here, this nice little line, this, right? That's 4 p.m. You see it right here in this top corner. That is 4 p.m. on it was a couple days ago, January 20th. All right. Actually, more than a couple days ago. And this drop from the close to the open, this was Netflix. Netflix from the close to the open dropped about 20%. That's a 20% drop. So when earnings are not in this season right now, and I've seen earnings happen where you're like, well, okay, like, you get a little down, it's down 5-10%, maybe not even that much. 20% overnight, woo, that's fast. That's fast. So this is now my day charts. This is Netflix. I just want to show you Netflix because Netflix is, I hate to say I love Netflix. You love Netflix. Everybody we know and they mama have net. You got Netflix. You even if you don't have Netflix, you're not paying for it. You got somebody's password. Everybody I know got somebody's password. It's probably nobody in the country that doesn't have somebody's Netflix password. All right, it's crazy the amount of people watching Netflix. And so this gap right here, this gap was an earnings gap. Now, 80% of gaps will fill. What does that mean? That means there's a lot of people who started buying down here, hoping what? That we would get back up to at least just to say 500, because that's 506, to fill that gap. Will we get there? I don't know. We'll see. The red candles mean down, prices pushing down each day. The gap was earnings because it happened in the middle of the night. So you woke up. If you own shares, they were 508. You went to sleep, you woke back up, they were $400. Almost $100 less. That's crazy. But that's what happens when companies miss their earnings, right? So that's Facebook. And matter of fact, let me show you this on Facebook real quick too. If I go to the month chart, now here's what's kind of scary about Netflix. I ain't gonna lie. This beautiful candle right here was March 2020, this was COVID. We just actually came all the way down to retest. So think about that. In these 3 really bad months, we erased, like, how many months is this? Let me do it with the mind. Where's it at? Where's it at? Where's it at? We erased, jeez, where's the number? We erased 20 months of profit in 3 months. That's what can happen right now. That's what I need y'all to understand. I don't care how great the company is. I don't care what you think about them. I don't care how much you love the CEO. I don't care who told you the company can't come down. It's too strong. It's too powerful. They have the fundamentals. I don't care who you've been talking to. If Netflix, which was literally the most amazing stock from the lows of the recession, nothing beats Netflix from the lows of the recession. It literally was like over the last, probably before these last 3 months, it legitimately was like the number one most amazing stock in the world. I know we all love talking about Tesla. Nah, but you go back to 09. Oh, you go back to, matter of fact, let me do the math real quick. Because here's the bottom of 09. Where's the bottom of 09? That's right here. It's 260. This is what you got to realize. That was $2.60 because they had a split. So if I go from there to this high, that's a 20. That don't even make sense, y'all. That's a 29,180% return. Nothing big. So if literally a company that from the lows of the recession to the highs of COVID went up 29,000%, could erase 20 months of profit, 20 months in 3 months, why can't everything else do it? Why can't everything else do it? Please don't get cocky. Please don't get cocky and arrogant without knowing something. Oh, ain't nothing worse than real cocky, arrogant, confident people who just won't look at reality. If Netflix did it, you think Apple can't do it? You think Facebook can't do it? You think your favorite company can't come all the way back down to COVID highs? Now, I don't want that to happen. Don't get me wrong. I ain't saying that. That's not what I want. But I'm just saying. So let's go over to Facebook because that was actually the main entree we were talking about. So here's Facebook. Let me do this real quick. Let me get rid of all of this. So Facebook, since lows of COVID, how well has the company done? Up to those highs, about 180% return, right? We've experienced a bit of a pullback these last 1, 2, 3, 4, 5, 6 months, about 25%. 25% pullback for 1, 2, 3, 4, 5 over the last 5 months. We dropped 25% from the highs. Let me show y'all this. This is earnings. This monster can. Look at that. So this is a 25% drop. Matter of fact, let me put it on an hour chart. Put on a 30-minute. All right, so check this out. From the close down to 244, that's a 25% drop. Think about that. It took us 5 months. It took Facebook 5 months to pull back 25% from the highs. And because of a bad earnings, it dropped 25% overnight. The market hasn't even fully reacted yet. Why? Because people going to wake up, see how bad it is, exit some positions. Some people who know how to trade are either going to believe, it's all based on belief. You think it's going back up? I'm pretty sure every call is dirt cheap right now after this drop. Some people are going to buy some calls for 2 weeks out. They think they're going to get a quick pop. Some people are going to think it's going to pop back up tomorrow. They're going to be buying calls at the open. Some people are going to buy some calls down there. Calls just mean you're making money when prices go up. They're going to give it 6 months. They're going to give it a year. Okay, that's smart. Okay, I'm with you. I at least because you gave it some time. Okay. I've never say anything if you give something time because you always can get out when you want to, right? Some people are going to think the opposite. They're going to wake up, see this thing has fallen. They're going to look at, matter of fact, let me go back for a second to show you something. They're going to go back. They're going to look at other stuff that's falling lately. They're going to see Netflix, look at Netflix on the day chart and realize this was the day it dropped. And then it dropped another 12% the next day. All right. So some people are going to wake up and be like, man, it ain't too late. The market is going to be electrified, scared. They're gonna talk about the gloom and doom all day on all the channels, MSNBC and all that stuff. Some people gonna wake up in the morning, wait for an entry, and just start shorting stuff. Well, not start shorting stuff. They're gonna start shorting buying puts on Facebook. Some people gonna go both. Some people believe it's going back up. You like Kevin O'Leary? You like, man, it's Facebook. It's on sale. You like it's on sale. That's what you're gonna think. Matter of fact, let me do this one last thing. This will be fun. Let me go back to Facebook. Here's what I like to do too. Y'all gotta learn how to do this little stuff like this, right? Let me take all of this off for a second. All of this off again. And let me go to that hour chart. Because you can only see the after hours if you had a type of platform that can show you like these after hour moves, right? So I'm going to put a line down here, right? We know it went down to 244. I can't see that. That's this right now. This drop, I can't see it when I look at the day chart. So I have to almost kind of, right, make the line on one chart, go to a different one to actually see where we are. So here's what's crazy. Let me actually put this on the week chart. Now I'm gonna put it on the month. Ooh, y'all ain't gonna believe this. Y'all ain't gonna, you probably ain't gonna want to see this. This is that line. 244 is down here, y'all. Let me put the line so you can see it. The line is down here. Right? The line is down here. So in the morning, what's gonna happen is this candle right here. It's gonna be a big, ugly red or pink right now candle, and I'm gonna color it in. Show you exactly what it's gonna look like in the morning. Once the charts catch up, it's gonna look like that. That's oof. And how far is that back down? So from these highs, Facebook is down 37%. It's gonna be down 37%. Let me take this alert off because clearly that don't matter no more. And let's see, where exactly is that? So we're gonna open down here. So that means we basically just erased. I'll start from this high to here, to this month. We basically just erased the last 14 months. So think about that. Buyers, if you got in this month, any time in these last, 14 plus 5, these last 20 months, really, right? Your shares are down. If you were an investor, they're down. If you had some long-term calls, they're down. Anybody who's bullish, literally for the last 20 months, we're going to wake up and prices are going to be lower. That has an effect. What's going to happen? It's going to be interesting to see. Let's go to Snapchat real quick. So Snapchat, I ain't gonna lie, I've never liked Snapchat. When Snapchat IPO and I read that they called themselves a camera company, I was like, y'all don't even make cameras. You don't even know who you are. I'm not investing in some stupid company that literally these people don't even know what they do. You're not a camera company. I was like, what? I'm so glad I stayed away. I am. Now, from COVID's lows to now, yeah, they did really well. Everything did really well. Actually, they did amazingly well. It was 1,000% return. All right. So even though I didn't like them, and they were, right, check this out. This was the IPO, right? So it took from the time we IPO'd and it made that drop all the way down from looks like that first month we went up to $30, 29, ran all the way down to 49. If you were buying monthly, you had to suffer through all of this just to get back up to 30. That was after COVID. But look at this. We're already right back down to 30. We're already right back down to 30. All right. So it took 1, 2, 3, 4, almost 4.5, 5 years to get up to 83. And then we dropped from 83. Where's my line? Snapchat dropped from 83. Dropped 66% down to 28 in 1, 2, 3, 4, 5, 6 months. So think about that. 5.5 years to get there. 6 months. 67, just say 70% gone. Ooh, I don't know. I keep saying it. There's a lot of companies that got a COVID bounce, but they were not great investments. Nobody really cared about them before COVID, before everybody was at home, forced to kind of just figure out something to do. And a lot of people got on Snapchat because now you quarantine. What you gonna do? Yeah, you gotta have some fun. You gotta entertain yourself like a little kid or a big kid. Company did amazingly well, 1,000% return. But if you don't know about technicals, you don't know when to get out, you have no idea what I'm doing when I'm pulling up these charts, it's gonna be tough. It's gonna be tough. And some more companies are coming down. Mark my words. Oh yeah, there's some more companies on the way down. For sure. There's some more companies coming down. This is just the beginning. It's the beginning. There are gonna be some amazing companies that always stay amazing. So let's look at some of those real quick. So Google, check out Google. Ooh, Google's earnings. I'm gonna go straight to it. Let's go to a 4-hour chart real quick. Look at Google's earnings. Ooh, look at Google's earnings. Yeah. Oh man, if I'm gonna put it on the hour chart. Look at that. This gray shaded area is when you can't take a trade. The black shaded area, right? That's 9:30 to 4 when the market is open. So we open today, market pullback. We're still pulling back now. But yesterday at the close, we went up about 11%. So Google closed at just say 2760, went as high as 3060. That's 3,060 bucks. All right. We opened at just say 3,000. So we went from 2760 up to 3,000 overnight. And there's people making money off all this stuff. Where you been? Where you at? What you doing? What y'all doing? Now, I'm not saying you got to play earnings. I'm just saying, are you involved? Is this brand new to you? Or is this your culture? We all know about hip hop. Cool. Hip hop is a culture. You probably a part of it. I grew up in it. Great. Has some good things about it. Has some terribly negative things about it. Are you part of this investing culture? It's a culture. It's a culture. You won't just wake up and understand all of this stuff. No, it's a culture. It is. Let me show you Apple real quick. Oh, let's look at AMD. So AMD is a big semiconductor company. Look at that. Went up. Oh, great earnings. Was up. And then today, slowly, right? So pulling back. All right. Apple. This was Apple last week, right there. Not a huge candle, but nice candle. And look at that. We got some more momentum, more. Oh, and then look at this. Look at this right here. Apple's kind of slowing down. It's slowing down. It's clear as day. Look at this. Look at that. We ain't going nowhere yet. We get under 172. We get under 172. I'm telling you now, this stuff ain't that hard. You can see that. Look at that range. Look at that range. We bounced off of 172 and a half like 4 times this day. Today was real tight. I was watching Apple today. It was real tight. I don't know. Let's take a quick look at Nasdaq. I'm gonna go to the day chart just to keep it real clean. So Nasdaq has had 1, 2, 3, 4 good days. 4 good days, but my friends. I shouldn't do that voice. I do it all the time. Whatever. I think I'm Mexican, like in another lifetime. I love Mexican food. From what I know about it, I love its culture. I've been to Mexico, a couple different countries in Mexico, so I'm not being like a jerk when I do that voice. It's when I it's like what do you say? Imitation is the deepest form of flattery. It's this form of flattery. I'm half Mexican. I just don't, Yeah. Like my friend. My mom lives in Vegas, man. There's this little spot. It's a birria taco spot right across the street. I love it, man. I'll be over there all the time. They know me. I'll be over there kicking it, man. I love it. And I love cooking too, so it's a lot of that. But nice hammer candle here, right? Nice hammer candle. That hammer should have told you something. We ranged inside of it for 1, 2, 3, 4, about 5 days. We got above it. Market liked it. We pushed. But could we do this move right here again? A move up and then drop, right? Is this just the setup? Right? Is this just the setup to get all y'all excited about Netflix? And then Netflix. And then PayPal is just going to do one of these. Wow, I'm messing up everything. Nasdaq is going to market just drop again. Is it possible? Yep, it is. And if I put my indicators on, I don't even want to. So this little indicator right here is yellow. That's good. It's positive. It's yellow, but it's still in the red to yellow, which means it's in bearish territory. We're getting more bearish volatility. People are selling for the most part. The market goes up. When it goes up, let me show you. When it goes up, everything is blue. All right, every single uptrend. This is one of the most amazing indicators in the world. When everything is up and actually strong, it's blue. Right now, everything is red and yellow. All right. So I know that was a lot real quick to throw on you. But can we go right back down? Yeah, we can. So what do you do? What do you do? What do you do? Well, depends on your level of skill. The sad part is if you don't know anything about options or earnings and you're just very, very, very brand new, you're over 25, over 35, maybe even over 45, you've never really gotten into this world, this culture, and it's all brand new and a little bit intimidating, then that's tough because you really can't do too much. I even to have a one-on-one consult with me, I do consults with people throughout the week. I probably last year did like 200, right? Um, I love helping people, but as soon as I start with my most favorite question, which I got from a character on New Amsterdam, Max, my guy Max, I'm like, how can I help? How can I help? That's my question. And then people will say, oh, well, I got these, and now I'm down. Some people are up and trying to figure out what to do. Some people are like, oh, I just threw money in COVID. I don't know what to do. Now I'm trying to get some education over. I'm trying to get some help so I can do this the right way. Right. The first thing, if you don't know anything, is you got to get some help. It doesn't have to be me, but I think I know my stuff. I do. I love teaching this, breaking it down, helping people to make sound decisions, not based on some special formula that I have, but logic, principles that work across the board. I specialize in futures trading. I was obsessed with futures for like the first, probably to some level still now, for years. If you can trade futures, options is technically a lot easier because you got a lot more time, right? So I'm really a technical. We start talking about the charts. Oh, I can pull up anything and give you some really, really insightful information that can make you some money, right? So, but it took me 11 years to get that. So what do you do? It depends on where you are. If you're not in Facebook, cool. Don't worry about Facebook. This is just education and, brighten your day. Share something with you. Hopefully you learn something about earnings, how important earnings is, how impactful it is. Facebook dropped 25% over 5 months and then dropped another 25% from the close today in literally not even one day. Ooh, that's crazy. It's crazy. So you're gonna hear all about it tomorrow. We're gonna be talking about it. We're gonna be talking about big tech, Snapchat. Oh, I didn't show y'all Pinterest. Oh, I didn't look at Pinterest. Let's look at Pinterest real quick. I ain't look at Pinterest in a while. Matter of fact, I don't think I looked at Pinterest all this year. Pinterest stands for pin interest. Like you can pin your interest. Literally, that's what you're doing if you use Pinterest. You're pinning your interest. Okay, so not that bad. These last 1, 2, 3, 4, 5, 6 months, everything has kind of been, slowly pulling back from these highs. Let's see. From the lows of COVID, it went up about 150%. And from these highs, we've fallen about 15%. Not too bad compared to its competitors. And then I don't know if they had earnings recently. I don't see anything. Actually, let me go to the hour chart. Yeah, I don't see anything. Oh, you know what? I typed in the wrong thing. This ain't Pinterest. Isn't Pinterest? Where is Pinterest? Where is it at? I thought it was Pin. Maybe it's not Pin. What the heck is Pinterest? Oh, there it is. Pins. Okay. Oh, all right. So, okay. Whole different story. My bad. Erase all of that. They have fallen. They actually had earnings today, too. They dropped 11% from the close at the market's close at 4 p.m. It's already down 11, just say 12%. If I go to the month chart, I'm sorry. Yeah. Look at that. Just typing in the wrong stock. Look at how different the analysis is. My God. So Pinterest was $10, ran all the way up to 90. That's a 766% return. This is that COVID pop a lot of stocks got. This was probably the easiest time in our lives to have made money because everybody was at home on Pinterest, using Facebook, on Google, app. Like what weren't we doing? Furniture stocks up, everything was up. Zoom, Peloton, you're working out now. Right? That wasn't forever. Those weren't long-term buys. You had to just think it through. Is this something that is solely because of COVID? What was this company doing before? That's all you had to ask. Apple was amazing before COVID. Microsoft before COVID. Facebook was great before COVID. I think to O'Leary's point, yeah, he's right. They got almost 3 billion people on the site. You're not about to get off Facebook. You're not. You're not about to get off Facebook. All right. Stock dropped 71%. 71%. That's a lot. Any questions? Any stocks y'all want me to look at real quick? I'll wait. It's crazy. It's so much. I said in one of my posts, I was like, yo, this is the show. This is the most amazing show on the planet. it's like season 4 Ozark. Y'all seen Ozark episode 4? I can't wait to the other half. But this market though, it's real life and it's wealth. And here's the thing: when you really get into this, and get, let me say what culture stands for. Culture, the acronym I'll never forget from grad school from Clark Atlanta, is BRIMPALS. Culture is a set of beliefs, religion, the religious things you do, right? In that culture, you do religiously. The beliefs of that culture, the religion, the education. You got to learn something to get into this. The materials. What do you need to be a part of it? The politics, right? The politics that affect this. The aesthetics. Is there a look to a trader, a day trader? Not really. Not really. Now, if they got on a limitless hoodie or something, yeah, they took one of my classes. Yes, they're investing or trading, right? Aesthetics, the language. Oh my God, the language. If I start talking about in the money versus out the money puts or covered calls or looking at intrinsic versus extrinsic volatility, the MACD, stochastics, RSI, Ichimoku, cloud, Bollinger Bands, the TTM squeeze, you won't even know what the hell I'm talking about. And those are just the tools that traders use to make money, right? So yeah, the language, and then last the social, right? So that's a culture. It's defined by those parameters: beliefs, religion, education, materials, politics, aesthetics, language, and social. This thing is a culture. I want you to be a part of it. I do. It's deathly critical. It's critical for your family and for you, man. It is, woman. It is. Ozark. Oh my God. Oh, it was so good, wasn't it? Wasn't it? Ooh, it was so good. What up, Anthony? My guy Anthony Rice says, will Nvidia pop? Since AMD did, will Nvidia beat its earnings? Nvidia. Let's take a quick look at Nvidia. Nvidia. Done really, really well. Done really well since COVID. How much is it up since COVID? 675%. How much is it down in these last 3 months? About 40%. Yikes. So if I hop over to the day charts, what you'll see, this is a classic downtrend. So great question, Anthony. I would almost say, and I know some people are playing earnings, most people play earnings kind of like a move up to it, what's called the run up. So it's like you're trying to make money, hopefully, because if people assume earnings are good, a lot of times stocks will slowly rise in value. And then earnings will kind of be a dud sometimes, or it'll still go, right? So there's this run up where you kind of try to make money, options trading, you kind of get in, try to make some money before. Why? Because earnings they could beat the revenue, like Facebook expectations on revenue, but miss the earnings. And the stock literally dropped 25% overnight. So it's a lot of people, a lot of folks who really know what they're doing, they don't gamble on earnings because it literally is a gamble. Even if they beat earnings, sometimes they still drop. Apple a couple quarters back, they had like 100 billion in revenue and they still dropped. All right, so it's I won't say there's a specific science to it, but what I will say, if we just bag out of this just a little bit, look at that. So real nice and easy. Let me draw the trend line. You should see it, and it's really just a channel. Yeah, right there, and then right here. I'll put it. I'll connect these two. All right, so we're just kind of bouncing. It's just classic stuff, right? We lifted up, we dropped, we ran back up to about 310. Oh, we made a little pop. We pulled up, we went lower. Okay, everything came down. It's a lot of hammer candles. We're trying to go back up, but will earnings blow? Will it blow through earnings? I don't know. Right. And think about the question. Great question, but Anthony said, let me pop it back up. He said, "Will Nvidia pop since AMD did? Right? Will Nvidia beat its earnings? Just because AMD did doesn't mean Nvidia did. It's a whole different company, right? So even the logic there for me, I'm like, now it'd be different. I think if the market right now was bullish, right, and certain sectors started to move, yeah, you get that. Like, okay, Tesla's up, Lucid will get a little bump, Ford will get a bump, industry competitors, yeah. But earnings, man, earnings is like gambling to me. It really is. Because the few times I've tried to play it that before night trade, I never win. I just don't. So maybe it's personal. Uh, can we look at HAS? What is that? Hasbro? What is that? What is HAS? Yeah, we can look at it. That's Hasbro. Let me do the same thing. Let me go to the month real quick. So this is one of those that I don't like. Why? Because since these lows of COVID, it really hasn't done too well, right? Since the lows of COVID, 154%. Okay, so not that bad from a percentage perspective, but think about this. This was the old high before COVID. I like to see stocks trading like this. The high before COVID, this is Nasdaq. This was the high before COVID, right? And this is the new high, right? So I'm like, yo, let's keep this simple. It needs to be in Nasdaq and Nasdaq, the S&P, or the Dow Jones. It needs to be one of the best. Those are the three big indexes. Why are they the indexes we care about? Because they're the best stocks, right? And a lot of the same stocks are in all three indexes. Microsoft and Apple are in all three indexes. You can't get away from Microsoft and Apple. You can't get away from Microsoft. You shouldn't want to. You shouldn't want to, right? So if I go back to Hasbro, I don't love that. So I don't know if you're investing in it, but something to think about, right? Because it hasn't matched up with the broad market. The broad market has done amazingly well, and it is up 150 something percent, right? But it has not done better than where it was pre-COVID, right? So to me, right, this ain't matching up with the broad market, right? That's what I want to see. Let me go to the day charts though. Kind of choppy. I mean, you can see that. Let me go to the week for a second to make it a little cleaner. All right, look at all these weeks. We ain't even going nowhere. Look at all these weeks. Look at that. Look at this. Let me draw with a box. Long ugly range. We trying to figure out where we going. No, I'll put it right here. All right, we kind of right in this area. All right, between just say 90 and 102. We get down here to 90. We get back up there. No, we get back down. No, and then we push. Oh, we don't have enough buyers. We drop again. No, and then they start buying again. Oh, we back up to 102, and then we drop again. Right. These ranges happen. I hate to see them. Usually clearly there's a trending breakout one direction or the other. Right now, the market in the short term is down. This company hasn't even done as well as the market. So here's what I think, and I probably could show you. If Nasdaq drops again in the next few weeks, stocks like this, they're gonna get burned. They're gonna get burned because they just already weren't dominant. You know what I mean? Like they weren't even right. Let me go to the hour though. Did they have earnings anytime recently? Looks like they had earnings, and you should be able to pull if you use Thinkorswim. You should be able to see earnings in like 2 seconds. Earnings is right there. I haven't looked at Hasbro in literally probably like a year, but I saw that really, really quickly. Like I do, go to the hour chart, and just look. Where is there a big drop, a big green candle or red somewhere during the pow right there during this gray part? So looks like they had earnings back there. And after earnings, look at that. Next morning, price pushed up, and then a really, really bad day. 2 days they went lower. Okay, now it's trying to recover, trying to get back up there. So, but not one of those stocks that I personally love and would really, tell you to go hard on. It's just not matching up with the broad market indexes, right? With the All-Star team. I wanna rock with the player that's on the All-Star team. NBA All-Star game is coming up. If you had to bet every single penny on one player of the 4 or 500 in the NBA, If you're smart, savvy, you're going to bet on one of those all-stars. They didn't get in the all-star on the all-star team nominated by, other players and coaches because they okay. No, they're the best of the best. It's the same thing with stocks. Pick the best ones. Right. Okay. Let me see. I got some comments. I started looking at stocks on S&P. Wasn't sure to compare, so I need to look at pre-COVID and walk through it. Yep, definitely do. Somebody said just on Pinterest. Somebody laugh. I don't even know what I said, but I'm glad I can give you a good laugh. It's healthy to laugh. Did y'all know that? It's healthy to laugh. I was reading an article the other day. I was blown away. I'm like, damn, that makes sense. That's why I look so young. Everybody be like, you look so young. I'm about to be 42 on Valentine's Day. I know I don't look 42. I know. Because I spend most of my day smiling and laughing and thanking God for what I have and just trying to see the positive and being appreciative. I'm too grateful to be down too long. I am. I've wired myself as an entrepreneur. I've been through all of them ups and downs. I don't really have bad. I mean, I have bad days. I'm human, but I know how to get me right back up. Glad I can make you laugh. I just made you healthier. It's a long term. Oh, it's a long term stop, not an option. But I was looking at it against something like Apple and needed to understand. Yeah, so I would say when you're comparing. Oh, matter of fact, let's do that real quick. Let's do that really quick. That was the whole point. I should have left that up. Right. So if I go back to my toolbox, let's do this. Apple. I'm gonna get rid of all this stuff. Don't worry. Clean chart. Apple month chart versus Hasbro month chart. I wish these were the same color. Hold on, man. That's annoying me. Let me make these the same color. That background, I'm on black, coal black. Bam. There we go. All right. Oh, and then I got the little grid on there. Hold on, let me take that grid off real quick too. I just, perfectionist with it. If the grid ain't on one, it shouldn't be on the other. Okay, and then let me take these little time expiries. Okay. So check this out. This on the right, I'll put a box where COVID is. This is COVID Apple, right? That really bad month, February 2020. And this was the pre-COVID highs. All right. Look how high we are above those pre-COVID highs. If I looked at that on Hasbro, the pre-COVID highs, we still have yet to get to. Right. And technically, look at this. This should really scare you. Actually, if I put a box over those two months to make it a little bit more clear. So check this out. I'm gonna put a box over these 2 months. Really, right. So that January and February were when we started to find out about COVID. We didn't know. The market started selling off. The VIX started popping up. It ran at like 42 or something crazy or whatever it ran up to. I can't remember, right? So those last 2 months, those same 2 months on Hasbro, look at that. We're still inside those 2 months on Hasbro, right? So this is fundamentally, you can't even compare the two, right? You can't even compare the two. Now on this side though, look at Tesla. Tesla done super amazingly well. Facebook, same thing since COVID. All right, even though it just came back, all right, just came back to these kind of where it was. The Microsofts of the world, same thing. Same thing. Look how high that is. The pre-COVID high. All right, those 2 months way back there. All right, so we're way above 200. That looks totally different from Hasbro's performance because it has not gotten back to those highs. Now it's done well percentage wise, but it's also ranging now. Why? Because we're still inside of this range. We're still inside of those 2 months. We haven't gotten above it yet. Now we might, and that'll be good, right? So if we can get above 110, then yeah, we should get to 130. That'll be a great time for Hasbro. But right now, yeah. All right. So if you're thinking long term, it's due diligence. It's really believing in there's thousands of companies, thousands. You got to believe in them and do your research and have some sound reason that's not emotional. Just not emotional based. I love Hasbro. It's a company that made Transformers. I love Transformers. I'm an 80s baby. In fact, I was born in 80, right? So I love the Transformers. I love Hasbro. I do. But when it comes to investing in my money, I want to see a certain level of performance, and you can see that very easy in the charts. Hasbro hasn't performed as well as I would like it to. All right, that's me though. It may 6 months, a year from now, be at 250. All right, so you can't take, all right, but in terms of like thinking how I think, or at least kind of thinking through some of those mechanics, yeah, think about that. All right, think about that. Oh man, that sucks. So y'all know what just happened? My mouse just died. Look at that. I gotta charge my mouse. Live. It just died. All right, well, sit here and answer some questions or something for a second while I'm letting it charge for 2 minutes. It charges super fast. And I've been on for about an hour, which I didn't even plan on it, but I think I was able to test my mic with you guys. I appreciate that. Let's see. Somebody said my birthday is in February too, but I'm 10 years old. Old or older? You 10 years old? You 10 years old watching this? That's great if you 10 years old. I don't know if you meant 10 years old or older. But either way, thanks for watching. Young man or woman or older, big bro, big sis. I don't know who I'm talking to. Thanks for watching. Let's see. My guy Charles Holland said, looking for a pullback on SMH. Shaking my head. I don't know. It's not shaking my head. Pullback on SMH. I don't know what stock that is right now. I got to look it up. Now that we're just about finished with semiconductor earnings, need a leap entry. So what's a leap, y'all? A leap is I forgot what it stands for. Basically, it's a long-term options play, right? It's something. Charles, you know, man, look it up for me real quick. I looked it up the other day because I had forgot. I don't talk about leaps often because I feel like a lot of these educator dudes be like charging y'all crazy amounts, thousands of dollars, and all they really teach you is that, oh, if you buy a long-term option, it has a really high probability of winning. Yeah, theoretically, yes, true. But a lot of these people still aren't teaching you nothing. I could teach you that in 2 seconds. I just taught you that. The longer you give an options contracts are based on the probability of price going above a certain price, like the current price going above or below whatever price you choose based on a certain amount of time. You got to pick the stock, you got to pick the direction. You think it's going up or down. If we talking about basic singles, verticals, right? Your debit, credit spreads, all that stuff, whatever. It's direction. You still got to understand direction and use a chart, right? If I buy a contract that expires in a week, it's going to be cheaper than one that expires in a month. Why? Because the month contract gives me more time. So it's more expensive because it gives me more time. And it actually means I technically have a higher probability of being right on picking the decision. I mean, making this decision, thinking it's going to go up or down. All right. Even if it drops real bad, if you give it more time, it still can come back up. Right. So if we go out a year, those contracts are thousands on the best companies, but you got a whole year to be right or wrong. You're not trying to day trade where you got to be right in the next 20 minutes, 15 minutes. So anyway, I'm gonna come off my little soapbox there, but I do see a lot of people like, and I can kind of read through some of the market and stuff. It's like they use all this funny language. I'm gonna teach you long term, yada yada. I'm just like all they doing is talking about leaps. That's all. There we go. Long term equity anticipation securities. Long term, keyword long term. That's all it is. Long term. So right now, if you believe in matter of fact, let's do that real quick. Let's do that real quick. Let me check these real quick. Let's see, did I miss any stocks? Oh, Sheena asked me to look at Sheena, I hope you're asking me to look at eyes. I want to crack a joke right now, but I'm not. Eyes. What is eyes? Eyes. Okay. Second, Insight Medical, $1.40. So I ain't even about to talk about this stock. It's $1.40. There's nothing I can say that I really want to say. In my opinion, it's a penny stock. It's the market cap is dead low. It's a small cap. Yada yada. I don't even know. I don't even know what you want me to say. Now I know you're probably looking at this spike that it just had back here. I don't know what that was, but as you can see, that was very, very, very short lived. We right back down. We're literally right back down to the same 140 where we started. So I don't know what that was, but this is one of those stocks I personally would never touch. Doesn't have the volume, doesn't have the market cap, the buying power, and that just tells me it's not a dominant major. So don't get me wrong. If you believe in it, know about it, and do your research, cool, invest in it. You know, but I hate to see stocks like this because it's harder to trade. Like I'm trying to win, so I want to pick the stuff that's winning. They're not winning. All right. Um. Somebody said NEE. What the heck is NEE? Xterra Energy. So same thing. COVID lows. COVID was here. Oh, wrong one. COVID lows up to the highs of 93, about 115% increase. And that's about standard, I would say. Even companies like Hasbro that haven't, once again, like surpassed their previous high still should be up like 100%. Like at least, right? So this is, and then once again, this stock also just came back to bounce off of its pre-COVID highs. All right. But we're still inside this month. So if I go to the week chart, the week looks down. I just told you it was down. The day is trying to go up. Let me get a little more detail. So let's see. Were there some earnings in here somewhere? Let me see. Actually, let me go to the hour. I can see it better on the hour. I don't see any earnings, or at least there wasn't a strong earnings. I don't know where. Drop in a pop. Was it here? It's kind of dropped real fast, and then we ended up dropping and then dropped that next day. So that probably was earnings. Let me go to the day chart for a second for whoever asked for this one. Yeah, it's bearish right now. Once again, all is red. Yeah, it's yellow. So this selling pressure is lightening. It's lightening. It's getting a little weaker, but it's definitely, we are not right now firmly in an uptrend on the day chart. It's gonna struggle until you really have that like confirmation that the day is up. It's like, yeah. So I would say trade with caution. This blue line right here is the 200 period moving average. It probably should go up a little bit more. It's like 81, 82 to test that area. But once again, if the market comes down, if Nasdaq is not able to sustain, we don't get some, some buying and kind of really recover through, what we just experienced, all this stuff is gonna be down. It just is. And once again, without any indicators and all that stuff, right? Go over here to good old channel. I'm gonna draw the channel. So there's the channel, right? So even without me pulling any fancy indicators on, right? Yeah, it's down. But a lot of stuff is down. A lot of stuff is down. Felicia Bridges said, laughter is medicine. Laughter is medicine. Yes, it is. Laughter is medicine. I don't even know what voice that was. I was going for one voice in my head, then it kind of changed in my head. That was terrible. Laughter is medicine. Let's see. Sheena said, can you look at eyes? Oh, I did. Somebody said, oh, the birthday person. And then, yeah. Leaps, long-term equity, anticipation securities. Long title. Stuff that we believe is going to be up later. In layman's terms. All right. Security stocks that we're anticipating, waiting, long-term, giving it a year or more. Equity. Equity stock. Building value. All right. So let me come back here. So that's it. I gotta say this really quick before I go. I ain't gonna do no long spiel at all. If you're interested in learning about options, I gotta say it. I got to. Why? It's not a sale. It's because I know a lot of you guys need the help. I talked to 200 people last year. Most of those people were losing money. People don't reach out to me to get a console because they're winning. All right. People don't reach out to me and my cousin Joe because now some people do. Yeah, a little bit. for the most part, the consult's like, hey, something's going wrong. I need some help. All right. So millions of people flooded the market. You've never been trading. You want to learn more about this. I'm doing 2 really dope classes coming up starting February 22nd and February 23rd. One is a 7-week live options class. The other is a 7-week live futures course. Futures is a little bit more futures is amazing. It really is. If you have the discipline, you want to do this for long term, you really want to give yourself access to the different markets to be able to create income, learn both. Options is amazing. It's amazing. You don't have to get to futures. You don't. But once again, when I started this journey 10 years ago, I really wanted to like learn everything to give myself options. Some days I don't trade options, but I can trade futures, and I don't need futures to be like amazing for me to make money. I literally can make money any day on futures, right? So I found some balance. I don't have to be in a ton of options trades all at the same time. And if I'm not in any options trades, I can still day trade futures if I choose. I'm technically kind of using a lot of the same fundamental technical skills. It really is the same basic things that I'm using, but you just got to be a lot sharper with futures because it's bigger money. And technically, there's cheaper futures too, right? So 2 different markets, 2 different asset classes, 7-week courses. I think you love them. The price, I'm gonna just say it real quick and I'm out. The options class is $750. You're not gonna find a 7-week options class with as much depth with somebody as passionate as me for $750. You're just not. Why is it $750? Because it's a pilot. This is my 4th class, and I did these 4 intentionally just to kind of really learn how to teach this the right way to a diverse group of people. I think I figured it out. I'm gonna do this last class, and then I'm gonna take all of this stuff. I'm gonna take some time off, a couple months, repackage it. It's gonna be super dope, and then I'm going to create an online course, so you could just buy it online. I don't have to teach it live. Well, I still probably will teach it live. Maybe one more time this year. Maybe not. So if you're interested in options or futures, go to limitlessclass.com. There's also a bundle price. The futures class is $1,499. That's nothing if you know about the power of futures. That's nothing. That's literally cheap. And then you can get both classes for $19.97 if you choose. If not, that's cool. Subscribe to my channel on YouTube. It's Being Noble. Check me out here on Facebook on Insider Trading. It's a community me and my cousin Joel Harrison started with 30,000 people in it. Mostly people that look like me. Amazing group of people. So thanks for watching. That's about it. Have an amazing day. Share this with somebody that you know and that you love who needs to think seriously about building wealth and getting in this market. Because you own Facebook, so you might as well own it. Or maybe not. Maybe not Facebook. Facebook will come back up. I believe in Facebook. I do. I think they'll be okay. I do. But they got to fix some stuff. They do. So talk to y'all soon. Peace.